This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, March 16th, 2016. Euro dollar. So the euro has come back under a little bit of pressure off those highs at 112.19 from last week, though at this point it's difficult to establish clear directional insight with the market chopping around overall. I think we need to see a break back above 112.19 to open the door for a retest of the 1377 yearly high, while a break and close back below 110 would do a good job of putting the pressure back on the downside, exposing last week's key low at 108.22. Anything in between is classed as neutral, and we need to see a break on either end for clear directional insight. Sterling dollar. So cable has come back under pressure in recent trade, and it looks like we could be seeing the formation of a lower top at 144.37 ahead of this next downside extension, which will be confirmed on a break below the recent multi-year 7-year low at 138.36 further down. A break below 138.36 would then expose the 2009 multi-year base and a measured move objective at 135. At this point, only back above that recent high at 144.37 would negate the current downtrend. Dollar yen. So dollar yen has been locked in a multi-session consolidation, which could be a bearish consolidation ahead of a continuation lower below the multi-month and 2016 low at 110.98, which would expose a measured move towards 107 further down. At this point, we need to see a break back above 116, some key previous support, to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss trades within a broader recovery structure, and the market continues to favor additional upside beyond recent multi-month highs at 112 and towards the 115 area further up. At this point, look for any setbacks to continue to be very well supported towards 108, with only a break back below multi-week range support at 107.15 to compromise this constructive outlook for Euro Swiss. Aussie dollar. So despite some recent setbacks in Aussie dollar over the past couple of sessions, the market has put in a fresh 2016 high, and while the market holds above previous resistance at 73.85, there is risk for additional upside beyond the recent highs that we saw in 2016, just shy of 76, and towards the 78.50 area further up. At this point, it would take a break and close back below 73.85 to put the immediate pressure back on the downside. Dollar CAD. So dollar CAD setbacks are finally showing signs of stalling out after the market traded down to a 78.6 fib retracement off of the October low to January 2016 high. At this point, though, we need to see a break back above recent highs at 134.47 to take the immediate pressure off the downside, while inability to do so will open the door for the possibility of fresh weakness back down towards a full retracement to that October low at 128.32. Kiwi dollar. So Kiwi continues to be very well capped into rallies ahead of medium-term resistance at 69, with the market now focused on a retest of next key support, which comes in at 65.46 further down. A break below 65.46 would then expose medium-term support at 63.47. At this point, only back above 69 would compromise the overall bearish outlook for Kiwi dollar. SPX 500. So the S&P 500 has rallied into an ideal lower top zone between 2000 and 2025, and the market could look to put in this lower top now ahead of a bearish resumption eventually back towards and below the recent multi-month low from February at 1808 and towards a measured move at 1600 further down. At this point, only a close back above the 2050 level would really compromise this outlook and put the pressure back on the top side. Gold. So gold has seen minor setbacks in recent trade, though overall the outlook is constructive following that break that we saw several weeks back above 1191. At this point, look for 1191 to act as formidable previous resistance turn support in favor of the next upside extension, eventually seen retesting the 2015 high from January at 1307 further up.